Hello and welcome to myfinanceteacher.org, where our data-driven approach guides every step of our journey towards maximizing profits. By the way, Happy New Year, and as you are watching this video on top gold miners for 2024, what I wish you is for gold price to decisively break above $2,300 per ounce. Wouldn't that be nice for these gold miners? And today we're talking about top 3 miners, that's Newmont, Barrick and Agnico Eagle. Although this is the end of 2023, for now we only have Q3 reports from these miners. And looking into these Q3 reports, our data-driven approach looks at gold prices, reserves and resources, all-in sustaining costs of mining that gold. We look at long-term debts, taxes, number of shares outstanding. We take into account the time value of money and throw in a bit of a secret sauce on insider shares. With all of this data, what we arrive at is a discounted per share value after all-in sustaining costs, long-term debts and taxes. As you see, it's not an exhaustive list of factors affecting valuation of gold miners, especially the market price of their shares, and as that price fluctuates from day to day and even from week to week. But unless there is too much dilution and huge mistakes by the management, in the longer term we are likely to observe some divergence towards this fundamental valuation. So let's start with gold price, where we include 3 scenarios. Conservative scenario plugs in the gold price of $1,700 per ounce. Our balanced scenario uses the price of $2,000 per ounce, and our optimistic scenario uses the price of $2,300. As you see, even our optimistic scenario is not outlandishly optimistic. And in either case, in all 3 of these scenarios, we do lean somewhat towards being conservative. For example, looking at the reserves and resources, for reserves, we look at proven and probable reserves, while for resources, we only look at measured and indicated resources, without taking into account any of the inferred resources that these miners have. So looking at reserves and resources, what we're going to look at is gold, silver and copper. Starting with gold, the blue parts of the columns are the proven and probable reserves of gold. The red parts on top are the measured and indicated resources. And these numbers are in millions of ounces. So Newmont's reserves are nearly 150 million ounces, half of that for Barrick, and around 46 million ounces for Agnico Eagle. For measured and indicated resources, Newmont has 185 million ounces, Barrick has 104, while Agnico Eagle has 44. Next, moving on to silver reserves and resources, we see that Barrick's assets lean more towards M&I resources rather than reserves. Reserves are 150 million ounces and M&I resources are 820 million ounces. Whereas for Newmont, the split between reserves and resources is somewhat equal, close to 600 million ounces. Agnico Eagle holds around 23 million ounces of silver reserves and 63 million ounces of silver resources. Now moving on to copper, lately we've observed that some of the largest gold miners are becoming somewhat more interested in copper as well. Copper here is in billions of pounds. Next, moving on to all-in sustaining costs, long-term debts and taxes. The red versus green bars over here is the amount of long-term debts in millions versus the amount of cash that the miners are holding in millions as well. For cash though, I don't actually include cash into my valuation model, but we'll look at it here as some sort of an indication for the level of risk. We don't want to experience what happened to Goldcorp. If you remember, a few years ago, that used to be one of the largest gold mining companies in the world. But unfortunately, they had too much debt, not enough liquidity, and the liquidity troubles meant that they eventually were acquired by Newmont. So looking at our miners, Newmont has nearly $6 billion in long-term debts and over $3 billion in cash. Barrick has nearly $4.8 billion in long-term debts and over $4.2 billion in cash. Whereas Agnico Eagle has nearly $2 billion in long-term debts and over $350 million in cash. And as for all-in sustaining costs, the costs are highest for Newmont at $1,400 per ounce, a bit lower for Barrick at $1,250 per ounce, and again a bit lower for Agnico Eagle at only $1,165 per ounce. As for taxes, to keep things quick and simple, I just assume the same tax rate for all miners at 25%. Next, moving on to shares outstanding and discounting. Let's start with this chart on the left. Newmont has 1.15 billion shares outstanding, Barrick has 1.76 billion shares outstanding, and Agnico Eagle has nearly 500 million shares outstanding. We also look at the percentage of insider shares. That's percentage of shares outstanding that is held by insiders, as that would align the incentives of the management with those of shareholders. That might also be important for the valuation. And as for the numbers, Newmont has 0.12% in insider hands, Barrick has 0.63% in insider hands, and Agnico has 0.11% in insider hands. Now looking at the right side, blue bars indicate annual production at 5.5 million ounces a year for Newmont, 4.2 million ounces a year for Barrick, and 3.4 million ounces a year for Agnico Eagle. And just looking at the proven and probable reserves at current annual production, these proven and probable reserves will last for around 29 years for Newmont, around 18 years for Barrick, and around 14 years for Agnico Eagle. And to consider this time value of money, the discount rate we're going to use is 5.5%. In some of my older videos, I used to plug in the discount rate of 5%. Some commented about raising this discount rate, so let's try 5.5%. So with all of this data plugged into our valuation models, remember we have three scenarios, starting with a conservative scenario where we plug in the gold price of $1,700 per ounce. And in this scenario, we only include proven and probable reserves without considering any of the M&I resources, never mind inferred resources. Again, looking at the discounted per share value after all-in sustaining costs, long-term debts and taxes, the valuation for Newmont is at $19.79. For Barrick, that's $10.47, and for Agnico Eagle, that's $24.11. Next, moving on to the balanced valuation, we plug in the gold price of $2,000, and even in the balanced valuation, we still look at only proven and probable reserves in the ground without considering any of the resources. The valuation for Newmont is at $41.53, for Barrick that's $18.3, and for Agnico Eagle that's $38.77. And most excitingly, looking at the optimistic valuation, let's plug in the gold price of $2,300. And in this scenario, we're going to look at proven and probable reserves in the ground, as well as only half of measured and indicated resources, never mind inferred resources. So even in our optimistic scenario, we do lean somewhat towards being conservative. And in this case, the valuation for Newmont is at $95.29, for Barrick that's $45.15, and for Agnico Eagle that's $74.4. And remember, this is fundamental data-based valuation. If gold price breaks above $2,300 decisively, market sentiment perhaps might push these prices considerably higher. What do you think about it? Let me know down in the comments below. And of course, for more regular updates, consider joining us at myfinancesteacher.org. To do that, just scroll down a little and click this Join Now button. By the way, from January, the membership fee for new members will increase a little. Here at myfinancesteacher.org, we regularly look at fundamental valuation of quite a lot of gold and silver miners. Additionally, we have a separate category for juniors that might provide that extra torque to your portfolio once gold price reaches that $2,300 per ounce. Click on this category and you see a lot of very, very promising developers and explorers. For now, again, let me wish you a very, very happy new year. All the best wishes for 2024. Have a wonderful and magical weekend. Bye bye.